Hi, I'm Pattu from FreeFinCal. Today I compared the Nifty 100 low volatility 30 returns with that of Nifty 50, and the long term returns, the return difference between these two are at an all time low. And so, what does this mean? So, the Nifty 100 low volatility 30 has got 30 stocks from the large cap universe. These 30 stocks have the lowest volatility over the last 1 year, and the stocks with the lowest volatility has the highest weight. So instead of a market capitalization based weighting, this is a volatility based weighting, and more or less the weights of all the stocks will be comparable. I mean, there'll be not significant differences in weight like Nifty 50, where just the top few stocks have the highest weight. Now, if you look at the since inception, that is April 2005 onwards, growth of the Nifty 100 low volatility 30 index, that's the blue line, it has done quite well with respect to Nifty. I keep talking about low volatility stocks. I keep talking about picking stocks based on low volatility. I have a stock portfolio which is primarily based on low volatility, and of course a healthy business. And in September 2021, the absolute return difference between my stock portfolio and that of an equivalent investment in Nifty 50, that is an imaginary equivalent investment in Nifty 50, was something like 12%. That is the low volatility portfolio, my portfolio, had a 12% higher absolute return, including dividends, compared to the Nifty 50, that is an investment in UTI Nifty 50 index. Just 1 month later, in October, the return difference decreased from 12% to about 1.5%. So there's a big fall. That is the low volatility index suffered a big fall. You can see that here, since January 2020. You can see the crash. Of course, in the crash, this had a lower drawdown. The low volatility index had a lower drawdown, but you can see that since I would say mid-September or something like that, the index started falling. It started falling a little bit before Nifty 50, but of course now Nifty 50 has caught up in the fall. Now more or less they're in the same place in terms of the fall magnitude, I would say. But what is this? This change in the absolute gain triggered me to look at the return differences, and it has something that we can learn from. What you see here is the 1 year return of the low volatility index minus the 1 year Nifty 50 return. That is, the rolling returns have been subtracted, and you can see currently the return differences are like about 1 year return differences minus about 12%. That is, the low volatility index return is 12% lower. This is the lowest since it was during the 2008 crash. And if you look at the same data for over 5 years, and you can see that the current values are basically at an all-time low. It's almost 0%, a little bit less than 0%. So for the first time this year, in February 2021 and currently in December 2021, the 5-year return of the low volatility index is lower than the Nifty 50 5-year return. This has never happened before. Only in 2021 this is happening for the first time. And if you look at the 10-year return, again it has been falling since early 2018. It's been falling down, and currently it's about 2%, approximately about 2%. So again, that's at an all-time low. So what does this mean? This just means that no strategy, I've been saying this again and again, let me say it one more time. This essentially means that no strategy would continue to outperform a market capitalization weighted index at all times. There will be cyclic ups and downs. The low volatility index is no exception to this. Of course, when you buy a low volatility index or invest in low volatility stocks, you are guaranteed of low volatility, but that doesn't mean your absolute return will be higher. Your risk adjusted return may be higher, but your absolute return may not be higher. Of course, as of now, there is no easy, simple way to buy a low volatility index. There is a ETF, but that ETF will have a lot of problems of liquidity and so on. Price nav deviations will be there. It's not advisable to buy ETFs. As of now, there is no index tracking the low volatility index, but this is something that we must appreciate. These factor based indices because the history is short and much of the history is back tested, everything looks rosy for us. But there will be cyclic phases in all factor based indices with respect to a simple index like market capitalization based index like Nifty, and we must be ready to accept it. Whether it is momentum, low volatility, alpha, quality, value, whatever it is, there will be ups and downs.